In an environment where investors suddenly feel a lot more confident about the economy, what do I do with the stocks that thrived when everybody was worried about the economy? Stocks like CyrusOne, it's the real estate investment trust that owns data centers. From the spring through the end of September, CyrusOne was one of the hottest names in the market. Companies riding a fabulous secular trend, the endless increase in demand for those big warehouses full of servers. And it also supports a solid dividend. The stock ran from $50 at the beginning of the year to $80 at its peak a little over a month ago. And since then, though, the stock's been crushed, plummeting to $66 as of today. What went wrong? Nothing. Nothing company specific. Most of the weakness is because of the rotation away from secular growth stocks that have smooth earnings and into cyclicals that thrive in an accelerating economy. In fact, last week, CyrusOne reported a really strong quarter, but the stock got slammed anyway. It's down 11% since then. That's because management announced that they're not putting the company up for sale, something that had been rumored in recent months by who knows what. At this point, though, you've got to wonder, is the stock overly punished? So let's take a closer look with Gary Wojtaszek. And Gary Wojtaszek, we call you, I'm going to say Gary W. We call you lots of different names because it's hard. Rarely do I do that off-camera stuff. To get a better sense of his company and where it's headed, Gary, welcome back to Mad Money.
Great. Hey, thanks for having me back.
All right.
On, Jim, good seeing you.
Okay, they always do a phonetic for me. It's Gary Wojtaszek, Gary Wojtaszek. I said, let's just get it right.
Just learn how to pronounce it as well.
Okay, you got to help me here. There are people, you're my only data center guy. I always tell people when on conference call, we got the data center guy. I said it this morning with David and Carl. There's a company. It's called Arista Networks. And they say that there's a pause in data center. There's another company, AMD, Dr. Lisa Su. She goes, there's an acceleration in data center. They can't both be right.
Yeah.
Tell me what.
Well, you know better, but they're both in different parts of the market, right? Arista's more on the network side, AMD is more on the CPU side, and so I think what you're seeing is a rotation from some of the cloud companies wanting to do more of their own networking stuff. And that's, I think, the impact that you're seeing on Arista, and everything else is up and to the right. I think all CPU and storage is going to continue to boom for many, many years.
Well, it's absolutely, I mean, you have key clients, and the key client, Amazon, Microsoft Azure, Google Cloud, they all have, they're constrained, right?
I don't know if they're constrained, not constrained enough, but they are booming.
They're booming. That's what I mean.
It's been a fantastic ride for us, having no sales in that business 4 years ago. It's about 40% of our company's revenue right now, and it's accelerating.
Okay, so I see financials very big too. Yeah. So what happens? Is that backup? What are they doing there?
No, financials in the industry, we've done a really nice job. So a couple years ago, we acquired the Chicago Mercantiles Exchange data center in Chicago. So all the futures trading now goes through our facility in Chicago. We tied that into a platform we acquired a couple years ago that has a number of the largest hedge funds around New York and commercial banks. So, that whole industry is growing, dramatically. And what you're seeing in all businesses across the spectrum is that a combination of a hybrid cloud. So they're doing a lot on their own in all the critical applications, the high security stuff, and then they're outsourcing a lot to the cloud, and we're seeing a lot of that hybrid business as well.
Now, when I looked at, there's a great, you have an unbelievable deck. It looks like that the strongest area, well, it is, the strongest area, this is something that's very contrary to every other company I deal with. It's Europe.
Yeah.
How's it possible?
So, the wave, the cloud wave that was going on in this country, had taken off about 4 years ago.
Right.
And, Europe is a little behind the U.S., and the reason for our expansion into Europe was we saw that developing over there. And we've kind of hit it out of the park. My only regret is we didn't go earlier, but right now our European business is up 70%, and we're doubling our footprint. So by the end of next year, we will have tripled the capacity we have.
But you see, I look at it like this. If things were so bad there, you wouldn't have that ability to do that. They can't be as bad as the media says.
Oh, no, we're somewhat in an isolated industry. I mean, what's happening in the cloud and tech is a little different than, in the broader economy. But even in the broader economy, if there's a level of weakening, I mean, there's still going to be a big push to the cloud because it's pretty efficient for companies that manage the IT that way. Okay,
so what happens? You decide one day I'm going to do a 20-acre property in Council Bluffs Island. Right. How does that happen? You throw a dart?
Well, we've done a lot of work there. We've got a customer that we're doing a really unique project for, and it's specifically for this hybrid cloud approach. And what we're going to see over the next 5-10 years is a completely different data center topology that is all associated with the growth in AI. And that requires just big compute and storage capacity.
Okay, help me here. You made it very clear in the conference call, you're not for sale. What I want to know is the opposite, which is I often talk about this with David Faber. There are many reporters who don't check things out.
Yeah.
And they can just say that this guy's for sale.
Right.
It's entirely possible that they're just wrong. Was the reportage wrong?
Yeah. Look, there's always rumors in the market, and we just felt it appropriate last week to kind of come out, put a fork in it, let people know that we're not for sale, so that we can get anyone who was buying a stock on those rumors out of it, and just kind of really let our results speak for themselves.
But at the same time,
a record quarter.
But at the same time, I mean, you always want to do what's right for shareholders. I mean, I always tell people, like, when you say you're not for sale, it doesn't mean we'd rather blow our place up than take a bid.
Oh yeah, no, we're always going to be good fiduciaries.
Right,
so,
right. I mean, because
we're always going to drive whatever is more appropriate for our shareholders.
I personally am very glad you said what you did, because we don't want people buying stocks on the show on tips, because then what happens is they buy high and they sell low. And I thought it was very responsible what you did. Get that out so people can better do the merits, and then we just have to deal with the fact that when rates go up, people have decided, I don't need this guy anymore. But I think a secular growing real estate investment trust, or one that is actually doing things self-help, are the ones that work. Yeah. And you buy them when they throw them away.
I'm with you. I mean,
all right.
We've done really
terrific.
Well.
That's Gary Wojtaszek. Okay, he said, I got it right. President and CEO of CyrusOne. This has long been, as you know, every time in the lightning round, this has long been the data center REIT that I want you to own, and I'm sticking with it. There isn't anything here that I don't like. I didn't care about for the takeover rumors. I care about the fundamentals, and they're excellent. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.